Well, hello, good evening, and very Merry Christmas to one and all. I wanted to do a video tonight. Kind of, I, I wanted to do an in-depth video tonight, kind of cap off, let's say, the last few months, and to give maybe an indication of what I'm expecting. Obviously, once the new year rolls in, and to kind of orientate us, definitely to orientate myself in my trading and hopefully orientate you as to what I'm thinking for the long term and both the long term and the short term. Um, the strange thing about Elliott Wave in general is you can have two opposing views held both at the same time. As for example, what you're looking at right here, short term bullish in euro dollar, long term extreme bear in euro dollar, to the point where I'm trying to reduce my exposure to euro in general, but that's kind of neither here nor there. So why not kick off this let's say festive season video, starting on euro dollar, and work from say the long term and into the short term. I get the feeling that this video is going to go on for a while, so maybe crack open a beer or something harder, maybe a whiskey sour or something that might get you through it. Okay, so let's go out to the daily chart in euro dollar and again run through what I think is happening. This is the low February 2015. The big decline we had from, I think it was a 3-year decline, 2010 or 2009 high. Anyway, that was a 5-wave decline, possibly in a wave A. Ever since 2015, we've basically just ranged, and there's been ups and downs, but the price is stuck. You couldn't even call this a dead cast bounce at this stage, because given the severity of the decline, I think it was 149 was at the high, into a low of 104.60 there was the low. And given the extent of that decline, you would have expected probably a larger bounce. If the euro was going to continue on as this powerful currency, emerging and resurgent currency, wouldn't you expect a larger bounce off that 104 low? But no, we've just ranged and we've just gone basically nowhere for almost 3 years now. The low being February 2015, so we're heading into 2018 now, so nigh on 3 years. Okay, so what I've got here is a correction higher in a wave B. So we had the wave A down into the low 104.60, and we've got a 3-wave corrective pattern, wave B. I had previously thought that this was the high here in wave B, calling it an ABC high, but that's gone by the wayside now at this stage. It hasn't been, let's say, the interpretation which calls this wave 3 here, or sorry, with the interpretation which calls the recent high as the wave B high, hasn't been discounted yet. But it's become so much, it's been negated to the point where it was worth changing to a new short-term pattern, and that's what we did 2 weeks ago. So we had our wave A down, and we've had 3-wave corrective pattern flat, expanded flat actually at this stage. 3 waves up in A, 3 waves down in B, and we're working on 5-wave pattern up in C. Let's get rid of my squiggles there for a second. So this 5 waves is labeled in blue. 1, 2, wave 3 was the recent high, possible wave 4 into the recent low, and we're working on a 5-wave pattern to the upside into resistance. 123.50 is my target. The reason 123.50 is my target is because that would place a 161.8 extension of the rally in wave A as the length of wave C. So it's a nice Fibonacci target, and a pretty common one in expanded flats, where wave C would extend to 161.8% of wave A. So that's for the medium, well, for the next, let's say, month, that's the target. Close out this 5 waves up in wave C and complete a larger wave B. From that point, again, we're looking at establishing lower highs and possible entry points to the downside. Okay, so let's get rid of the squiggles, and probably shouldn't call them. I'm demoting the value of my work here by calling them scribbles. I should call them trend lines or something a little bit more important. Okay, so that's the recent high is marked as a wave 3 high, but also an alternate wave B high, just like I pointed out there. So I've relabeled this as a 3-wave decline, and again, the more bearish short-term view hasn't been invalidated as of yet, and that's why I have alternate labeling on this 4-hour chart here. But there's always a but. I think we just hit a point where the relentless rise in Eurodollar was looked more impulsive than it was corrective. So we tilted to the short-term bullish outlook into a possible high at 123. So let's look at what's happened so far off the low. We've had a possible wave 1 up, complete wave 2, and since that I've been marking these as wave 1 2 1 2 rally to the upside in a third wave. And there's possibly nothing else we can really say about this. The only thing to point out here is that the low here at 115.50 is the invalidation point for the short-term bullish count. So if we get a break of 115.50 again, then we're talking turning down for good in euro, or in Eurodollar, sorry. Okay, so let's get into the short-term chart. So the short-term chart, if we go back here again, short-term chart is taken off this low here, this wave 2 low. Okay, so we're down to the 30-minute chart, and this is where I've counted 1 2 1 2. Now this rise here in a possible wave 1 pink here, slightly problematic because of the sideways action that was it last Friday, was it? Tuesday. Or Tuesday or Wednesday, forgive me. So I can count this as a possible contracting triangle wave 4. If that's the case, if it's a contracting triangle wave 4, then wave 4 is completes above the high of wave 1 there. Only slightly, but it does complete above it. And that's the important part for counting an impulse wave up. So I'm going to stick with this for the moment. There's also another count which calls this rise off the low a series of 3 1 2 waves, but I think this is probably this 1 2 1 2 in pink is probably more fitting at this stage, and definitely the decline in the last 48 hours has been more corrective looking, so it's more like a second wave than anything else. So we're finished the week now. This is Friday. I don't see much else happening this evening. We've had a little bounce off the low. That low there came in at about 118.13. Let's get an exact price on that. Low 118.16. So we can expect, if that's the low of wave 2, we can expect wave 3 to continue higher when the market opens again. I think it's Tuesday. I don't expect a whole lot to happen next week either, but we might see progressive rises in euro dollar in this third wave higher. So for this week, we're closed out. We could possibly have a low in here at 118.16 in a second wave, and we can expect, given that corrective kind of decline there, we can expect a break of this 119.61 is the critical kind of short-term resistance here. That was the previous high there, labeled wave 1, and we could expect that resistance to break and continue higher in wave 3 of 3. And over the next few weeks, we can expect a 5-wave pattern to complete in green labels. And let's go back out to the 4-hour chart here. 5 waves up in green labels. So we're already 2 waves into that, and we're working on wave 3, correction in wave 4 and wave 5. This trend channel should hold, and it does suggest the Fibonacci high as a pretty reasonable target in wave 5. Okay, let's continue next week with this same outlook, and we'll probably we'll look for, I think, an acceleration higher beginning next week. Okay, so let's move on to pound dollar, and I'll go pound dollar daily again, and I'll work from high back to low, high resolution, or sorry, low resolution back to high resolution. So again, as with the euro dollar, I'm counting a 4th wave correction here in pound dollar. We got the post-Brexit low here in September, last September 16, and then ever since then we've just got this kind of overlapping, undecided overlapping kind of pattern to the upside. So I've been interpreting this always as a 3-wave rise, but the internal labeling obviously has changed as the price has developed, but it's always been a corrective 3-wave rise. So we've got a wave A up immediately off the low. We've got a triangle wave B, A, B, C, D, and E, which completed around March, let's say, this year. And then we've had, let's go into the 4-hour chart. It's probably the best way to look at the C wave of 4. So let's get in there, the 4-hour chart. And again, get rid of those. I do tend to talk myself through these videos, so I'm giving myself encouragement as we go along. So there's that triangle, wave B in red, A, B, C, D, and E, wave B. And we've probably, possibly got a complex wave C operating here. That would be probably a double combination. So let's see, we've got an A, B, C in A. I should get our marker on that. So that's A, B, C in wave A, and then a triangle wave B with A, B, C, D, and E, wave B. And then we're working on an A, B, C again in wave C, green, which will close out C of C of C of 4, which is quite complicated, to say the least. Okay, so let's get down into this 3-wave pattern off the end of the previous wave B triangle, and we'll see what the price action can tell us for the immediate future, the near-term future. Okay, so there's our wave B low again, and I can't count this as a 5-wave rise, and that's why I've gone with a double combination. I cannot count the rise of the wave B low here as a developing 5-wave pattern, so it's most likely a 3-wave pattern with wave A, possible triangle wave B, and then a wave C to come. Wave B looks to be finished. This possibly last night's low, which was is it 133.31, I believe. I'll just double check that again. I should buy a better mouse. 133.31. Yeah. So that was a possible wave E low of the triangle wave B. So that's our wave B in brown here. We've had a little rise off that today. It's it has potential, but it hasn't. That little pop higher hasn't developed into anything of any significance just yet. So I want to see a completed 5 waves and a 3 wave decline in at a minor degree here, in order to give us a good indication that this triangle price compression has completed. So we could probably expect that early next week. We could probably expect a pop higher to a higher low, and a nice, actually, that should give us a nice entry point off the triangle low there. Wave, or from that low, what can we expect? Because that's really what everyone wants to know. Again, the key resistance is the previous high there, 135.50, but I have a possible target at 138.40. So we're talking about between 138 and 139. So right now we're trading at 133.70, so the high 133. So if wave 2 was to complete in or around the same price, between let's say 133.50, you're talking possibly a 500 point rally into complete wave C. So that would be at that point wave A, wave B, and wave C would complete. Would have 3 wave rally complete, and we should look for, again, lower highs off that high. This is talking about early January, mid-January probably. We'd be talking about looking to the downside again. But for the next few weeks after the Christmas period, we're looking at possibly a 5 wave pattern to the upside. Wave C here will reach equality with wave A at about 138.40. So that's the target for the short term, and like I said, there might be a nice entry point here. Definitely with a break of 134.63 there, that previous wave B high, that would be a good indicator that the rally in wave C is underway. Okay, so that's pound dollar complete, and only half hour done. Okay, so dollar yen. Go to the daily chart. Dollar yen, I'm looking at the development of. I did have a little alteration here. What was it, 2 weeks ago, where I was counting. Let's zoom that out a bit. I was counting this wave B in red as the extreme low, but on kind of on examination of the pattern off that low, it just didn't fit particularly well, and it seems to fit particularly slightly better as a failed 5th wave in wave C of B. So for the moment, we're going with the August 16 low as the low in wave B, as a failed 5th wave. All right, so off that low, we had this rising wedge in wave 1. Should have left that on it. 3 waves down in wave 2. Very nice impulse rally wave 3, 4, and 5 to complete a possible wave 1. And everybody knows that if that's wave 1, then we get a 3 wave correction in wave 2, and what you should expect again is break to new highs in wave 3. So I think that we are well underway in wave 3 with wave 1 and 2 complete. And we're working on wave 3, 4, and 5. And right now we could have very possibly a wave 1, a sequence or a series of 1, 2 waves to the upside already complete here. Off that extreme low here in wave 2, orange there. So let's get in leave the 4-hour chart and the daily chart and get into the 4-hour chart and see how this is developing. So that is the previous wave 2 in orange there, and off that low we had this nice bounce in wave 1, expanded flat correction wave 2, and again a bounce and a possible expanded flat correction wave 2 again, and off that recent low we've had a nice bounce to the upside again. So what we're talking about is a possible 1 2 1 2 1 2, with the expectation that wave 3 will carry out to new highs. So let's get down into this bounce off the low here and see how that's developing. So this is the one I've been tracking on the daily updates. So we have our wave 1 up, 5 waves up, 3 waves off the low, possible 3 waves to the high, wave B, and then 5 waves down in wave C. You can count this in a few different ways. I'm sticking with the expanded flat wave 2. It seems to be, to me, the best way to count it at the moment. It has problems, but hey, don't we all? I mean, there is a way of there is a possible 1 2 3 up into this high, and then a 4 and a 5. But again, if you would count it that way, you wouldn't expect much more of a correction, and again we would expect a rally to develop in wave 3 green here. So let's move along and see what we've possibly got. Wave 1 up, wave 2 down, a possible wave 1 and 2 underway. I've been counting over the last couple of days. We've seen this contracting price range here in a possible wave 4 pink. That hasn't. That could be still underway. Going on tonight or this evening's slight decline here. It may be suggesting a larger triangle, but we'll see. I'm just looking at this now again. The triangle. Yeah, I think I'll still stick with the triangle in wave 4, with an expectation that early or mid next week that we'll see a break of resistance again. The previous wave B here. So for the short term, we're looking at 1 2, possible 1 2 underway, and then we should see a pretty impulsive rally up in wave 3 of 3. Actually, let's get out to the 4-hour chart again. It's wave 3 of 3 of 3 in grey. So quite a powerful rally due here in dollar yen, and that's what I'm kind of anticipating over the next couple of weeks, and that's what I'm aiming for myself. That's the kind of point that I'm working towards myself in my own trading. Okay. So stocks. What's there to say about stocks that I haven't already said? You'll have read the intro I gave to tonight's piece and or tonight's update, and I'm comparing the rally in stocks to the very same rally in Bitcoin that has pretty much just broken today. Well, over the last week anyway. So I'm looking at I should go out to the daily. This is the January 16 low, and I was counting a wave 4 in red in brackets with an A, B, C, D, E, a triangle wave 4, and off that we're expecting a new highs. I think you can go back a few years into my old videos and you'll probably see me calling for new highs here around the 15,000 mark. At that stage, I was actually just calling for highs around the 18,000 mark. I didn't expect it to go this way, but then again, who did? All right, off that low, I can count 5 waves pretty much complete. Wave 1, I'll get me a little marker out. Wave 1, correction wave 2, Wave 3 broke out into 5 waves, 1, 2, 3, 4, and 5. Wave 3, wave 4, and this final wave 5 is what I will look at in the 4-hour chart. So wave 5 in blue. All right, let's clean up the chart before we move on. So we're going to the 4-hour chart, and I will look at this wave 5 in blue if I can. Yes. So there's the wave 4 low, and we have wave 5 in blue breaks out into green labels here. So you can see wave 1 up, correction wave 2, a wave 3 rally, 5 wave contracting triangle in wave 4, and then off wave 4 we have 1, 2, 3, a 4, and a 5 in wave 5 in gray labels in wave 5 green, which is here. So we have counted down how many sets of 5s here. 5 in red, 5 in blue, 5 in green, 5 waves complete in gray. So let's get into wave 5 gray here and see how that's broken out. So down into the hourly chart, and wave 5 gray broke out into pink labels here. So there's wave 4 gray, the low here, and that was an expanded flat again, wave 4, and then off that low we had wave 1 up, wave 2, an extension in wave 3 into the high, a very short wave 4, possible wave 4 here. You can count that. You can count the wave 4 as both the low that it's marked at and the more recent low here, depending on what waveform that you're going to look at. The reason I've switched yesterday or the day before yesterday was because the bounce off the low did seem to look more like a 5-wave bounce rather than a 3-wave bounce, and hence the shift of wave 4 pink to the low here. So off wave 4, we've got wave 3 here, wave 4, and off wave 4 we've got a breakout into 5 waves again, and a possible another contracting triangle wave 4 here. So let's see how wave 1, 2, possible wave 3, and A, B, C, D, E, maybe complete in wave 4. We want to see these previous lows here hold in order for this short-term pattern to stay valid. But for the moment, we're still good, even after today's trade. Slightly a down day today, in a possible wave E of 4 at a very minor degree here. So we'd see one more. We'd expect one more pop to the upper trend line there in wave 5. And if we were to expect wave 1 and 5 here to reach equality, then we would be talking about a final high 24,950 or 960 or something in that region. Definitely a break of the previous high of 24,875, and maybe into the upper trend line there. So that's kind of the plan going forward into January, is for one last little pop higher in wave 5 after contracting triangle wave 4. So we then, at that stage, we'd have 5 waves complete of 5 waves in pink, of 5 waves in gray, of 5 waves in green, of 5 waves in blue, and of 5 waves in red. Whew, take a breath after that. So that would be 6 degrees of trend completed again. And at that point, again, we'd be looking to the downside. But for the short term, most likely we'd see another pop above the previous high to complete wave 5 blue. Alrighty, so let's get into gold. Now we're actually drawing to a close, drawing to the end of the 6 markets. Right, so gold off the most. We should probably go out to the daily. Okay, so gold is completing wave a series of 1-2 waves to the upside. So we've got 1, 2, 1, 2, 1, 2. So a series of 3 rallies in impulsive rallies to the upside. We've got a nice series of higher lows off the November 15. So gosh, almost 2 years now. And we've got an alternate count, which again shows expected rally coming our way in 2019. So the daily count is pretty damn bullish. And in fact, we've just got a central line break again in daily RSI, and we've got a new higher low in MACD. So there we go. Momentum is pointing higher as well. So we have a go down to the 4-hour chart and we'll see. So the 4-hour chart is expanding this little portion of the price action there. So 4-hour chart, there's the alternate high wave 1 or the wave 1 green high. So 2 different degrees of trend, both wave 1, which predicts a decline in wave 2 and then a very large rally in wave 3. So far we've got a 3-wave decline in wave 2. I think that's possibly a triple combination wave 2. Sorry, a double combination wave 2. 3 waves down in A, 3 waves in B, and 3 waves in C to the downside. Off the recent low, we've had a nice impulsive looking rally to the upside. Today we've had a break on the 4-hour chart here. We've had a break of the 200 period moving average, which again is another bullish sign. And we've got a very favorable looking rally off that low. So the stars are kind of lining up in our favor here at this moment. I was mentioning about 1272 as the moving average, the 4-hour moving average level of the last few days on the 4-hour chart, and that was broken today. We're up about 1274 today. So again, we were looking for a rally in wave 3, and that does look like a 5-wave form off yesterday's lows. So we could possibly be looking at an extension in a wave 3, and definitely given the break of that 1272, we could be looking at price being supported rather than being suppressed by the 200 period moving average. It'll take a few days, it'll take a week or two for that to materialize predictably on the chart. But off the low, we definitely have 5 waves up in a wave 1 blue, 3 waves down, wave 2, and a series of 1-2 waves. And again, as expected today, the expansion higher or an extension higher in a third wave of again a possible third wave. So the outlook for gold over the next let's say few weeks is most definitely bullish now at this stage, even though I have been bullish probably for too long at this stage. But finally the price action is moving our way rather than grasping at straws. The break of 1272 today is a good sign. It's a bullish sign. So, like I was saying before I had to stop there, I have an expectation that these previous wave 1s here will hold over the coming few weeks, especially as this wave 3 here, this possible wave 3 in brown unfolds to the upside. So we've got a 1-2 and a possible wave 3 of 3 underway for next week. Most definitely next week we want to see a completion higher, possibly up into the 1280, above 1280 to complete wave 3. And we want the price to stay above 1266, which is the wave 1 high in pink. So short term, want to see these 5 waves in wave 3 complete, and longer term, we want to see 5 waves in blue complete. So in general, over the next while, higher prices, I think, is the way to look. And we'll be following that up, obviously, every night as that unfolds. Okay, so I'll move on to crude oil. This is the final market of the day. So this is crude daily, and what I'm looking at in general, the overview of crude is a three-wave correction in another fourth wave to a possible target between, as I've mentioned, I don't know how many times now, but as I mentioned, between 63 and 70. 70 being the upper target, and that would be where the price would come into contact with the upper trend line there again. So it's a three-wave pattern to the upside. We've got wave A completed in 3 waves. Wave B was a long, drawn-out triangle. So we had A, B, C, D, E in wave B. Completed around 45 or something like that. And since then, we're looking at a 5-wave pattern to the upside. We probably have wave 1, 2, maybe wave 3, and a possible triangle, wave 4 complete, and we're looking at wave 5 to rally in to complete the whole 3-wave pattern. And I'm probably talking about early next year, maybe the end of January, early February, to complete this whole 3-wave correction higher. And at that point, I'll be looking to the downside again. And right, so that's the long-term pattern done. So 3 waves up in a fourth wave. Let's go to the 4-hour pattern. And the 4-hour pattern is off the wave B low here. So switch into 4-hour. And what I've been looking at here is the unfolding of this 5 waves higher in blue. So we've got 1, 2, 3, and an ongoing wave 4 with a possibility of a triangle. So that has not been either confirmed or denied. So we could have wave 4 here also. But for the moment, it's even if it turns out to be a triangle, we'll still create higher lows and we'll still rally into a minimum target 63. So the 4-hour pattern, we've got 3 waves complete, possibly 4 waves complete, and we're working on the 5th wave in wave 5. So let's get down into that wave 5 there, 30-minute chart. Sorry, the wave 4 and the beginning of wave 5. So the triangle idea starts at the high of wave 3 and a possible 3 waves down, and that's where I have marked a complete wave 4. But the triangle alternate count, I reckon it's probably 50-50 at this stage, and we haven't broken initial resistance yet. So even with today's spike, it's looking more likely that it could even be the triangle that wins the day here for this short-term pattern. Okay, so the triangle is 3 waves down in A, 3 waves up in B, 3 waves down in C wave, and possible 3 waves up in D, and then we'll get 3 waves down to a higher low above 56.08. So realistically, it'd be about 56.80 or 57 to complete that 3 waves down in a larger 4th wave triangle. I'll just move that target over there. So that would complete towards the end of next week if that was the case. And obviously, key resistance there is 58.99. If we get a break at that 59 level, we're talking we'll bin that triangle idea and we'll work with the ongoing bullish pattern that I've been working with. Anyway, so while both patterns are bullish and both patterns suggest a very large rally in wave 5 blue, we're just talking about a matter of a difference in a matter of days between when the next leg of the rally starts. So off the low, I have labeled in the operating count here right now. I've labeled 1, 2, 1, 2, and a 1, 2. And again, we've got to move up today. So you know, we can't discount the alternate account. We cannot discard the current preferred account or operating account. And given the fact that we have actually broken out above the upper declining trend line, it does suggest that we should be more bullish in the short term. So for next week, obviously, it's going to be a quiet session, but the key resistance is the one to watch, 58.99. A break of that, and we most definitely will be on for a large move up, I think. We want to see previous lows hold. We want to look at 57.60, the previous wave 2, or 56.88, the previous wave 2 at 1 higher degree, in brackets there. So for next week, we're watching for key resistance break, and we're watching for very defined lows to stay in place, with one eye on the alternate account, obviously, as well. So that is the 6 markets. That's the run through done for everyone, and that is me for the week. I won't be back tomorrow because obviously I've just got the video done, and I'm wishing you, every single one of you, a blessed, peaceful, and happy Christmas. And let's meet back here. I reckon, like I said earlier on in the week, I'll probably do a video or 2 next week just to give an update. But I don't expect a whole lot to happen next week, as it's Christmas holidays. So for everybody, from me to you, to everyone, wish you a happy Christmas and obviously a most prosperous New Year. And we will, survivors, reunite here again in a week or so. So all the best, everybody, and happy Christmas.